Share Shootout, brought to you by Lion of Africa Insurance, insuring South Africa's future.
Welcome to the most vicious stock picking show on television. This is Share Shootout here on CNBC Africa. First with Business Worldwide. I'm Bruce Whitfield, your host, judge, jury, and self-styled executioner. Now, is it true that President Jacob Zuma spends his Thursdays watching Squawk on CNBC Africa? Is the US fugitive Edward Snowden already in South Africa, hiding in a specially designed KwaZulu-Natal compound? An construction company has actually been found guilty of colluding for the 2010 World Cup stadium contracts, already built a bridge and got over it. Well, they're trying to desperately. Introducing the challenger with 5 appearances, 2 wins and 3 losses. Sasha, I really do have Russian roots and I've got a jersey to prove it. Naryshkine from Vestact. He's up against the reigning champion with 6 appearances, 5 wins and a loss. The sly scheming and win at all costs. The East Rand's answer to Gordon Gecko. Gary Booysen from Vunani Private Clients. Nice to see you both. Nice descriptions of both as well. Well done. Producers have outdone themselves this evening. Both guests have pre-picked 3 shares and are keeping them close to their chests. Neither knows what the other holds. At some point during proceedings, they must accept at least one of their competitor stocks, even accept one of their competitive stocks. Otherwise, they have to leave it. More likely, they have to accept something they really don't like. Each has got 30 seconds to argue their stock pick. And so let's let the share shootout begin. Gary Booysen, I think we should go with you first, being the East Rand's answer to Gordon Gecko. I am always, you're not even from the East Rand.
No.
Where are you from?
I like the description.
Where are you from?
I'm born and bred in Santon.
Okay, Santon's answer to Gordon Gecko.
Much better.
Producers, you never get the researchers nowadays. Actually, East Rand, yeah, I could do that. Right, now tell me please why you would deliberately choose to invest new money, hard-earned money, into a global conglomerate with international reach, developed markets included, but mostly an emerging markets play of SABMiller in 30 seconds.
I think you need to look at my other 2 to realize why I need a little bit of safety in my portfolio. But yeah, it's a stalwart. It's it's incredibly defensive. It's got high barriers to entry. It's leading in most of its market. It's got good growth opportunities still in Asia for a company that size. And then looking at it. It's like you said, it's an emerging marketplace. So I mean, the other, Arnhauser, Heineken, they would love to be in the position SAB is going forward. A little bit more stable, not quite an aggressive growth company, but somewhere we will put the money, we'll see an increase in dividend and get good returns.
There we go. That's over 30 seconds, comrade. Sorry, that red jersey. You have chosen it deliberately, haven't you?
It's my school jersey. Yeah.
It's the biggest one you've got. Now, Sasha. Do give us an insight, please, as to why SABMiller is a dud idea.
I don't know why you get repeat guests when you're so rude to them all the time, Bruce. But let me...
Somehow you like it.
Somehow those suckers for punishment. Yeah, Brews is one of those few companies that you can get emerging market and developed market access to in a developed market, in London. So there are very few companies across the globe where you can sink your hard-earned money into, knowing that you have property rights, etc., all those good things that go with developed market companies. Plus also some of their fastest growing territories are, as you said, in developing territories. And you must remember that their Asian businesses that they bought all those years ago aren't really real contributors as of yet. So you're getting where I'm going with this. I'm going to say.
Yeah, okay. Well, I don't want you to say it yet. Okay, we need to build up to that. We get nervous tension going. Then we get it going. Right. But here we go. They haven't yet delivered. But when are these Asian businesses going to deliver? Because there's more snow beer drunk in China than there is Budweiser in the rest of the world. Budweiser used to be the world's most drunk beer. Now it's snow drunk lukewarm by lots and lots of Chinese people. But the margins on snow are this big. Budweisers are that big. At some point, the Chinese are going to stop drinking snow because they won't like the margins that SABMiller needs to put on them to get the value that Sasha wants.
It's one argument, but if you look at analyst forecast in the next 3 years in Asia, I mean, you're looking at probably 100% growth. A little bit of that, obviously, factoring the Foster's acquisition. But if you look at it, I mean, it's still even with that, even with low margins, it's still very underpenetrated. I think Snow is the market leader, but it's only coming in with sort of 22%. So I think there's a lot of room for them to muscle out the likes of Tsingtao and that, and get more dominance in the sector. Once they have the dominance, then they can hike the margins.
So, Sasha, it doesn't bother you you that they're not getting the margins. It doesn't bother you that they've really struggled in the United States. They keep getting criticized and torn apart for the Miller-Coors joint venture, which still, 15 years later, even with the huge firm hand of Norman Adamy imposed upon it for years and years and years, has not come right. They've done Foster's, controversially, they're 30 brands or something, whatever it might be. But come on, at 28 times? It's expensive.
Remember, Altria are the giant shareholder too, so there's some sort of overhang there. If they need to free up cash at some stage, they must be happy shareholders having injected this and then now got an emerging market valuation. So they must be well pleased with what they did all those years back. It doesn't bother me because I think, notwithstanding volume growths, which are fairly anemic, the growth will come through. Because if you look at just wages in those specific countries, they're rising comfortably above inflation. So that means in the future there'll be more and more people drinking their premium brands. At
the risk of rushing you then, you're giving it a big thumbs up.
I don't know what the other two are, but I'll give this one a thumbs up.
He sold you this one by going, my other two are really bad, so please take this one. So he set you up for that one. In the same way, this is on a much lower multiple. This is an increasingly global company, Sasha Naryshkine. It is a business with very firm South African roots. It was state-funded in its early days, of course. Even Gary's going to get it at this point. Give me 30 seconds why Sasol is a sitting duck rather than a dead duck.
Yeah, I think overall their expansion to Lake Charles, that's going to be key to a revaluing of assets over time. Because once you have a presence in North America, people will say, right, this is not an oil and gas company, this is a technology company in some instances. So let's revalue it. And that's not going to take overnight. That's going to take anywhere between 5 and 7 years for people to realize. But I think having got in at ground floor, you're going to probably see the stock on cheap valuations for a little
stock.
Well, I can't believe that was 30 seconds.
It was. Hey, you even lulled into some sense of security.
I need to talk like his colleague Viv. I'll get more in.
But that's why Viv government to speak so fast so they can get more in. Now, Gary, why is Sasol so perpetually cheap?
Why is it perpetually cheap? If you look at it, I don't know why it would be perpetually cheap. It is a resource play. Obviously, you've got the oil and the rand component, and oil. Where's it really going to go? Where's the earnings growth?
But shouldn't it be trading on a multiple higher than 10 times if Lake Charles is such a certainty?
It's probably more to do with the volatility. It's a risk within the counter that's perhaps making it a little bit less appealing.
Okay, but what is that risk? If Sasha's selling me a gas story in the United States of America, now that theme has been well played out on the show and elsewhere as well, where Americans want to become fuel self-sufficient. They don't want to be dependent on the Middle East. They're tired of fighting wars over oil. If you can tap your own gas, it makes you more energy self-sufficient. The story is a good one. If the story is so blimmin' good, why is Sasol so cheap?
I think it's still in very, very early phases of development there. So you've still got a long, sort of time risk. You've got a long theta risk on this investment. So looking at it, that's actually not, that not coming to fruition or not, a lot of things can happen, in time. But that's not really what concerns me on Sasol. I think, if you look at the operations, most of the revenue is still coming from South Africa. It's more than half is South African. And if you look at, so I think it's the latest reports by JP Morgan coming out on the company, they are grossly overstaffed in South Africa at the moment. And, you sort of, I've heard people say this is the platinum sector 2 years ago. They're going to have to cut costs. Doesn't matter, one of the lines in the report was it doesn't matter how many pencils they sort of, toss, doesn't matter how many, travel budgets they cut. It's going to have to come through an actual restructuring and employees losing their jobs, and you're going to see huge kickback from the government. So it's not, it is one that we, it has to form part of a diversified portfolio because it's a big weighting in the index. But we often hedge it out when the price gets a little bit too high.
Is that price at that level right now?
Yeah, I would say so. I think
even at 10 times the price.
Even at 10 times, you have seen a run up in the absolute share price, and you could be looking for quite a significant pullback here. So for me, I'm going to look to shoot it down. Okay.
But it's actually one last gasp effort to try and rescue yourself from oblivion on Sasol.
Just from Gary.
Just from Gary. Gary just has to swat.
I got it.
Exactly.
Got long arms.
Now, defend that, because there's a very strong argument on top of the super risk that David Constable, the new chief executive, has taken in America.
Yeah, you'll recall that Shell did a similar gas to liquids plant in Qatar, but on a cost basis overran by a function of 2.5 relative to what Sasol. So they're going head to head against probably one of the best in the world, and they're able to come out on top. I think they're brilliant. I think David Constable's obviously realized from his Canadian roots that the future is gas. So he's willing to take a calculated risk in North America, and I think over 5-7 years it will definitely pay off. So
pause there.
Pause.
Regardless of the compelling argument made by our comrade, you're shooting him down.
Still shooting him down.
You're shooting him down. You're going to regret it, I promise you that. Now, Gary Booysen from Vunani Private Clients. This is an interesting one because it has been the technology sector's darling. After Pinnacle Technologies, any other IT company, the only other technology company anyone would invest in would be
EOH.
EOH. So, in 30 seconds, why EOH?
Yeah, like you say, I mean, it has, you just look at the share price appreciation, you look at the earnings growth in this company, and it's phenomenal. And that's, probably the argument that you'll have against it is maybe it's run too hard already. But the one thing that we like about it specifically is that with the size, it's managing to get a lot bigger contracts. We used to do sort of 10, 20 million, projects to go and put in IT infrastructure, or at least, IT services, etc. They're now looking at more like 100 million contracts. So, with Gajima sort of, coming out of the limelight, it's taking up a lot of its market share, and I think very sustainable going forward. Also a lot of BE business, a lot of government business.
Your time is up. Right. Is this the famous brands of the technology sector, Sasha?
Yeah, worry about that very last line there. They've been getting a lot more. Now they want to move to a revenue of between 35 and 40% government business. Now for the time being, government's a great payer. But they've gone from the market used to afford them a 10 multiple to it's now in the mid-teens or even
it's 18
higher
actually.
teens.
Historical multiple of 18.
So you can't just go carry on purchasing growth because it has to. I think even though in a South African context where there is still some room for growth, they're starting to look offshore already, meaning that they can obviously see a time where it starts to level off. So I'm worried that you're overpaying. I like the business, but not necessarily the price.
Defend that one, Gary?
There's no question it does trade on a premium to BCX and its competitors, but I think it's because you're buying the quality. I mean, if you look at the management that's gone into this company, it hasn't put a foot wrong. It's like every acquisition is done. I think it's done like 44 acquisitions in the last sort of 2 years or something like that. They've been very, very good. I mean, our analyst has called each, many of those companies and sort of looked at the business model and asked the newly acquired businesses how, are these guys delivering on their promises? And they're all very, very happy within that EOH stable. So I think it's a very sustainable business. You pay for the quality. That's what it is. I mean, if you look at something like Naspers,
45 seconds.
I mean, you really can. Yeah, in the tech sector, yes, Naspers is a very different business. But I mean, you can get ridiculous multiples here. This share price could easily go, 500.
When my guests speak sense, they get extra time. You notice you get kept quite
I get
short.
nothing.
You get absolutely nothing. But to answer the original question, is it the famous brands of the tech sector? Because famous brands has grown massively through acquisition over the last 10 years. It's bought earnings over that period of time. It's rationalized its costs over a period of time. EOH feels a little bit similar without the sauce.
Smaller market, I think. And because, a lot of their businesses is services related, it's only so much of that business that you can get. Because remember that they'll full solutions from A to Z. So they'll walk in and say, no, how are you doing this with a silly little desktop in the corner there? Let's outsource your entire information systems department and we'll do everything for you, hardware installation at virtually nothing, because that's how I think they get the annuity business in the long run. So they lock you in. I just think that in this sort of business, it's becoming more and more cutthroat. People could charge whatever they wanted 15 years ago, but now everyone's a little bit more up to speed.
You're shooting it down.
Well, in the interests of this game, I have to, otherwise I've lost already. Yes, I'm shooting it down.
But let's pretend there weren't any rules and I was a nice person. Okay, that's 2 huge leaps of faith you've got to make.
Yes.
Would you shoot it down?
Yes, I'm shooting it down.
Yeah, but you would shoot it down even if I was a nice person.
You are a nice person, so yes.
Okay, we haven't spent nearly enough time together. Right, so then let's move on, Sasha, to your next 30 seconds. I'm interested in this one because talk about price, talk about demanding, talk about Gary suddenly becoming really nervous as to rejecting your Sasol pick. 30 seconds on Interwaste.
Interwaste, well, they've moved quite quickly to being a two-pronged business. So there's environmental issues and heightened concerns that environmental waste issues are becoming more and more important. And in fact, they recently got a Sasol contract away from EnviroServe, so it's not a very competitive market. But the landfill market is the one that's growing big time. And they've just recently acquired some land in Bupsfontein. and also the management of Ekurhuleni's landfill.
I wondered what they were going to do with Bobsfontein. Now I've just figured it out. We can talk a little bit more.
Charlie's Turan's from Bobsfontein.
No, she's not.
Yes, she is. I promise she's from one of those plots out there.
Fantastic. Well,
Gary would know. He's from East Rand.
does this plot grab you enough, Gary? The Interwaste plot. I just get a sense that this is too good a story that you're being asked to invest money in.
No, it is. It's a very good story. I mean, I remember going to one of their results presentations years and years ago, and I mean, the CEO is very, very charismatic, very, very good speaker. You just want to throw money at him when you talk. So
does he not talk garbage? In other words, no.
No, he does. He talks garbage, but with a lot of knowledge. Yes. But yeah, for me, I mean, it's quite possible it's not a company that we look at in a huge amount of detail. No. For me, it's probably just a little bit too small. I mean, it's what 300. You know, it's sub 500.
You think this one's small? Okay.
Yeah, it is very small. So it's. I mean, we've got our sort of very selected, micro cap stocks that we go for. This is not one of them.
Okay, this is not one of the micro stocks you go for, but you've got to pick a stock before the end of the show this evening. So, Sasha, you've got another moment to give another sales pitch on Interwaste. This is a company that is in a specialized space. We should all be paying more attention to the green companies. We should be. Is it on a green index anyway? Does it have that kind of support? No, you look at him, he's looking bewildered. But Interwaste, it's not particularly well known, it's not particularly well spoken about, but simply because it is tiny and in a dirty space.
Yeah, I had a look, nearly 90% of all the shares are held by 22 entities or people or pension funds. So out of the 770 shareholders, there are very few are actually paying attention. Alan Wilcox, who Gary referred to, him and his wife own roughly 48% of the business.
Is that a good thing?
I think so. I think in instances like this, because as the business grows and the share price grows, I mean, it's the only stock that Alan wants to own, you know? I mean, so he's got enough faith.
Leo Kirkenis told me last week that African Bank is the only stock he owns. So that's not always a great barometer of
but is
value.
It that he wants to own, or that he does own?
No, that he owns.
So you can't see value anywhere else in the market.
He sees far better value in African Bank than he was. So does the same go for Interwaste?
I think so. Charismatic business, and in terms of emissions controls, people even think, in China they're lax, but they're moving towards like Euro 5, Euro 6 emissions.
But this is not a company that operates in China, Gary Booysen. So do you accept it, or do you shoot it down with the contempt it may deserve?
Yeah, I think you convinced me there. Yeah, and also having seen it, I mean, I like the fact that there's a large share, there's going to be no principal agent problem in this one. So I'm happy. I'm going to keep it. I'll keep it because I've heard the next one is even smaller.
No, it's actually, I seem to have made a mistake. No, it's not.
Rude.
Oh dear. But anyway, he's accepted it. The lesser of two weevils this evening. If there's weevils come in garbage, don't they? I think they do. Anyway, let's take a short break. Gloves are off on the other side of this when Sasha and Gary go head to chest, because Sasha's quite a lot taller than Gary. Sasha has chosen Sasol and Interwaste. Gary said, okay, under duress, he takes Interwaste. He doesn't know it. It's a bit too small for his liking, but he'll take it because he doesn't know what's coming up next. I think he may be grateful, actually. The Gary Booysen's from Vunani Private Clients, SABMiller and EOH so far. SABMiller, despite being frothy, got the thumbs up. See you in a minute.